Hello and welcome back, PitView traders. This is your host, Steve Nurre, and thank you for clicking through again with our PitView education series on pair view basics and putting it all together. This will be the longest of our videos so far, as we're not only going to go through pair view basics, but we can't really go through pair view without showing how this puts together our entire three-step process that we've been going through over the last several videos. So speaking of, to stay consistent, in the last video we learned group view basics, which was essentially the second step in the three-step process for using PitView to analyze the Forex market. Group view, what it's doing is after we've gone through global view and found the strongest to weakest currencies, then we want to take a closer look to see which individual currencies that currency is trading strongest to weakest against. So it's finding the strongest and weakest pair for an individual currency. From here, after we've gone through group view and we've established the pair that we want to trade, then it's time to be able to establish and try to trade opportunity. So now that we've completed those first two steps in the process, now we're going to narrow down our analysis into a possible trade opportunity. And for that, we're going to use pair view. Now, before we get in and kind of finish up that three-step process to give you more details on pair view, let's just go through and I'll give you a quick understanding of what all the columns mean, a basic understanding so that you understand what each and every column is telling you on the pair view indicator. So pair view has given us, again, the most detailed look at liquidity provider activity at the bid and ask price. The power of all these tools established by PitView is the fact that you're not looking at Joe Schmo from Des Moines, Iowa, who trades a couple of micro lots a day. When we're looking at all of this information, we're looking at liquidity provider activity. What do all retail traders want? They want to trade along with the big money. That's what they want. And this is a tool that gives you that real-time view of what each and every individual liquidity provider, big money institution is doing at that bid and ask price. So let me quickly go through these columns with you just so you get a deeper understanding of what they mean. First, we have LPID. When people ask what that means, that's what we call our liquidity provider ID. In order to be able to disseminate this information to you, we're giving you basically access to individual activity by large big money institutions in the market, people that provide liquidity to the Forex market, which just also happens to be the largest market in the world. In order to give this information to you, the liquidity providers require anonymity. What that means is we can't just say so-and-so bank of what is here at that bid price. We can't give you those types of details because in order to give you that information, liquidity providers require that they remain anonymous. So we assign each individual institution a liquidity provider ID, and that's what they'll go by, and that'll remain consistent for each individual liquidity provider. So LPID is just the ID for the individual liquidity providers. The total percentage column, this is going to rank from based on activity of who the most active to least active liquidity providers are in the market based on what they're doing at the bid and ask price. So the total percentage column is going to tell you from top to bottom, it's going to tell you who's been the most active liquidity provider in the market and who has not been to the least active. And the total percentage column, when you look at it here in the bottom, it will always add up to 100% because what it's telling you is it's giving you the details of 100% of all the activity that's been occurring at the bid and ask price. So when you look at this top, let's say LP34 up in here, you see that out of all the activity that's occurred at the bid and ask price, that LP34 has represented 43.23% of that activity. As you get more experienced in PitView and using the PitView indicators, what you'll find is that there are some of our more experienced traders, if you will, that will become followers of individual liquidity providers of what they're doing. That's a little bit further down the road for you. Let's just stay with the basics for right now, though. So total percentage column is again showing you from most to least active of liquidity provider activity. And then we have the L column. Even though on my screen you see it's the 1 hour L column, that's based on what time frame that I'm using for these examples, but we all know that with PitView you can look at multiple time frames at one time. So we'll call this the L column because you can insert whatever time frame you want in there, and we'll go through that a little bit more when we go through how to customize your desktop. That shows the bid-ask imbalance for when liquidity providers have led inside the bid and ask price. Now what that means to you is, if you go back to several videos ago when we explained leading versus following and what that means at the bid and ask price. When a liquidity provider leads inside the bid and ask, it means that they are the first ones to create either a better bid price, a higher bid, or they're the first ones to go out and create a lower ask price. So they're the first ones to create a new bid or ask price. That's called leading inside the bid or ask price. And so that first column right here under L, L stands for leading. So when it says L right in here, or 1 hour L, let's just take a look at LP34 right up in here. What this is telling you is based on the activity that this provider has done when they've either led inside the bid or led inside their ask, it's showing you the each individual result for all the liquidity providers of what their activity has been and what the imbalance favors. Remember the imbalance, the percentage versus the percentage of time they led inside the bid minus the percentage of time they've led inside the ask. It's showing you the imbalance details for each individual liquidity provider of what of when they've led or created a new bid or ask price. And not only is it giving you the details for each individual liquidity provider, but down here at the bottom it'll give you a total. Based on 100% of liquidity provider activity, it'll give you an overall total of what the overall buy, sell, and balance has been. You see it's a negative here, but that would obviously favor a sell imbalance in here, that more activity has happened at the ask price on this pair. The next column would be what's called the F column, or the following column. Just like when we talked about leading inside the bid or ask, when a market maker or liquidity provider creates or is the first one to create a new bid or ask price, following is when one liquidity provider creates a better bid or a lower offer. Following is when, instead of creating a new bid or ask, I might join that liquidity provider. I will follow them into that inside bid or ask price, which is still a big, can also give you an overall sentiment of what I'm doing from a bullish or bearish standpoint, because I'm still raising my bid or lowering my ask. I'm just following someone else to that inside bid or ask price. So that's what the following column is doing. It's giving you the details of what each individual liquidity provider, what the imbalance has been when they followed inside the bid or ask price. And again, down here at the bottom, it'll give you a total based on 100% of market activity of what the activities have been when market makers or liquidity providers have followed inside the bid or ask. And then over here, a column that I personally use quite a bit, which is the T column, the total column. What that is, it's going to take an algorithmic total. It's going to base it off the percentages. Obviously, if a liquidity provider is more active leading inside the bid or ask than they are following, what the total column is going to do is it's going to combine all the activity, whether they've led or followed inside the bid and ask, based on an algorithm. That's going to give you a total. It's going to give you an overall view of the liquidity provider activity total based on both leading and following. That's a column that I tend to personally use myself, although many of our PitView traders, they might look at individual columns as standalone indicators. So again, the total column will give you, based on that algorithm, the total, you can even call it sentiment, of the buy and sell imbalance for each individual liquidity provider. And again, right down here at the bottom, it'll give you a total based on 100% of liquidity provider activity of what side of the market it favors, whether it's a buy imbalance or a sell imbalance. So down here it shows obviously a total sell imbalance of a negative 2.55 towards favor of the ask price. The next question you're going to have for me probably is, which column do I use? Do I use leading, following? Do I use totals? For right now, I just want you to know what the columns mean. I want you to know that L means leading, F means following, and T means total. And we've talked about what leading, following, and following means. As you get more experience with PairView, and as we go through a little bit more together in the education process, you'll find that a lot of it comes down to personal preference for a lot of our traders. So more on that a little bit later. I just want you to know what the columns mean for right now. The next question you're probably going to have for me is, well, Steve, how do I use PairView? What are the uses for this? Well, the three main uses for really any tool, and this includes PairView, is we can use it for trade confirmation. Trade confirmation, essentially, if you have If you have an existing trading method that you use in the market, which a lot of our traders do, whether you like to buy off moving average crossovers or support and resistance breakouts or pattern trading, this is by far the most powerful trade confirmation tool I've ever seen. What it does is whenever you get a signal to either buy or sell based on your existing trading method, you can use PitView, in this case PairView, to confirm those buy and sell trades, and I'll give you an example of that on the next slide. What I find that this helps you do if you use this for trade confirmation is it prevents whipsaws on your existing methods. What is a whipsaw? We've all been whipsawed in and out of the market before. It's when your trading method gives you a signal to, let's say, buy, you put in a stop order, you execute the trade, you bought it, you want it to go up, but it immediately comes down and stops you out. A lot of times it just means that you're on the wrong side of the market. You got whipsawed. PairView specifically will help us be on the right side of that activity to ensure that we have a little bit more confidence and direction when we get in on our existing trading method. And I have an example here on the next slide of a short-term method that I use to where we know we're going to be trading alongside the big money, the market makers, when we get into a trade off our existing method. As you gain more experience in PitView, and as we go through the education process more together, there's other traders that will use this as a trade management tool. Obviously, trade confirmation is for your entry. Trade management is once you're in a trade, how do you manage it? Well, the confidence that comes with being able to know that you're on the right side of the market, that you are trading along with liquidity provider activity, it can help you do what we call maximize profits and minimize losses. Whenever we get into a trade, most of us as traders are going to put in a stop order to manage our risk on a trade where we're wrong, and we're going to put in a limit order to take profits on a trade, and that's where we're right on a trade. A lot of traders, as they get more experienced in PitView, what they'll do is they'll use PitView when their trade is profitable to try to stay in a trade a little bit longer to wait for the imbalances to go against them, and they can gain a little bit more profit, a higher risk-reward ratio on their trade. Other times it can help you minimize losses, not just through the whipsaw effect on the trade confirmations, but minimize losses when things might be turning in the market based on large fluctuations on the imbalance side of the equation to get you out of trades earlier to where you don't lose as much, to where it can save you some pips from your losses also. And then as you gain much more experience with PitView, and as we go through this process, you can also use it for trade entry. When you see large shifts in supply and demand, the beautiful thing about PitView is it's the only tool out there that gives you a real-time view of what would be happening as if the Forex traded inside of a trading pit, to where you can see large fluctuations on supply and demand as the imbalance totals change up and down. So there are PitView traders that utilize this product that will look for large shifts on the imbalances on certain time frames, and they'll actually use that for trade entry, to actually enter into their trade. So those are three main uses for it. As a basic PitView user, the most powerful way to use it is obviously for trade confirmation. And as you get more experience, you'll learn to utilize PitView to where it can help other parts of your trading method and trading strategy for these other uses. Let me just quickly go through an example, a personal example for me, of how I use PitView as a trade confirmation tool. Now this is a short-term strategy, and then we're going to continue on with our three-step process and showing an example with the New Zealand yen that we've been following in our first two presentations here. So the way I would use PitView as a trade confirmation tool, and this is extremely simple, don't make it harder than it is this is a short-term strategy that I use personally called London Breakout, where when price after the London session opens at 3 a.m., when price breaks into neither new highs or new lows, I want to trade things like the euro dollar, dollar Swiss, or pound dollar as they break out in momentum in one direction or the other after the London markets open. So what that would mean is when price breaks the Asian low or the Tokyo session low by 1 pip, that would give me a sell signal on my individual trading method. Now I teach this method in our intermediate courses, which you are welcome to attend for more details, but I just want to give you a simple way to look at this as a trade confirmation indicator. Now I used to just take this sell and I would put my stop above this high. And a problem that I would sometimes have when the market's not cooperating with me is this would come down and trigger a sell to go short the euro dollar and then come right back up and stop me out. And that would be called a whipsaw effect in the market. When I implemented PitView into my trade confirmation by bringing PairView into the equation, what I now wait for is not only for it to break into a new low after the London session opens or into a new high if I'm going to buy it, but what I also want is I want the 1 hour total and the 5-minute total on PairView just to be red. If it's going to be a sell signal, those two columns have to be red. If it's a buy signal that it gives me, if it breaks into a new high, those two columns would have to be green. Just by adding that little step of green or red as a trade confirmation tool on this simple little intraday strategy, it's accelerated my profits because it's kept me out. I believe out of the last 8 losing trades I would have had on this trading this method, it kept me out of, if I would have not have been using PitView with this method, it kept me out of 5 of those losing trades, to where instead of having 8 losers, I only had 3. The power of that cannot be expressed enough of how this can keep you out of those losing trades. Why? Because when this gives me a sell signal, if I know that the 1 hour and 5-minute totals are red on here, I know that I'm on the right side of where the liquidity providers are taking this, that the liquidity providers favor selling the euro dollar in this case also. They favor the ask price, if you will. So that's a very simple way to use it for trade confirmation. So the action here, of course, putting these two things together with as a trade confirmation indicator is extremely powerful. So the question that you're going to have is, can it be as simple as just green or red in those columns? If it's green, buy. If it's red, sell. Well, for trade confirmation, the simple answer to that question would be yes. It can be that simple. Because for trade confirmation, all you want to know when you're trading in your method is that you are trading alongside the big money. And if PitView is just green or red, yes, it works very well as a trade confirmation indicator. However, if we go back to the previous 2 sessions or the previous 2 videos that we've had, I also want to break it down into how we can use PairView as part of our 3-step process of finding a currency, finding a pair, and then finding a possible trade opportunity through the 3-step process. Kind of like a Forex screener, if you will, to finding a trade opportunity. So that was just a little bit of that was a summary on PairView basics and what the columns mean and some simple uses for PairView, and we can go into and expound on those points much more as we get through the educational process. But let's also go through and complete our thought process as far as the 3-step ways to use PitView to find a trade opportunity, the 3-step analysis or 3-step process as we might call it. So let's go back to 2 videos ago with the first step, which was check global view. We log into our computer each day. I'm using a 1 hour time frame, and I know a lot of you at this point probably have questions as far as what time frame do I use. That'll be our next video actually. I'll go through time frames and how to customize PitView in your desktop to check those time frames. But first, let's go to step 1. 2 videos ago, what was our first step? We wanted to be able to pick a currency. We wanted to find which currency was driving the market, which currency was in play. So we checked global view to find the strongest or weakest currency. If you recall, the strongest currency that we saw as far as what was being the most, that had the most buying imbalances throughout all the liquidity providers was the yen. And remember, all this is ranking is the strongest to weakest currencies based on liquidity provider activity. Are they buying or are they selling? What are they doing at the bid and ask price? From there, we found the yen was very strong, and so we would double click on the yen on here to pull up what we call group view. So now that we know that the yen is the strongest of all the currencies from a market maker standpoint, now we're going to pull up group view to find which individual currencies the yen is trading strongest against. So we know the yen is strong. We pull up group view and we see, okay, the yen is it's been strongly bid up against the New Zealand dollar. We have a nice little strength or buy imbalance of yen versus New Zealand in this case, which when you trade it on an actual Forex platform would show up as New Zealand yen pair, okay? So we know the yen is very strong against New Zealand, and from there on our last video we would say, okay, well, now that we know that the New Zealand yen pair is an in-play currency pair right now, we can go ahead and look at a chart. So when we look at the chart, what we find is, okay, well, New Zealand yen is trading right next to a horizontal support level. You can see these three touches of this level right in here showing horizontal support on New Zealand yen. We know global view shows a strong yen. We know group view shows yen strongly bid versus New Zealand. So what does this mean to us? Well, this means that New Zealand yen, as it's been coming down, it's already been making lower highs and lower lows, and it's hitting this horizontal support level. Maybe we could look for opportunities as far as an action goes to short New Zealand yen. And that's our next step, is now that we find this by a horizontal support level, what would be our next step? Well, when we're looking at charts, we know that charts are constantly changing. This is also on a 1 hour time frame, which I personally I use quite a bit in my own trading. So as far as an action goes, as we look at the next candlestick as it forms on the chart, now we see the New Zealand yen is breaking through horizontal support. And this would be called a simple breakout trade. So I wanted to use a very simple strategy here of just a breakthrough support, if you will. So it's breaking through that horizontal support level. When we look at the pair view screen, not only is it breaking through that horizontal support level, we already have confidence that the yen is strong. We already have confidence that the yen is strongest against New Zealand, which on New Zealand yen would bring up already kind of a bias towards shorting the New Zealand yen pair. Remember, when you sell New Zealand yen, you want the exchange rate to go down, which would mean a weaker New Zealand and stronger yen. And both global and group view have confirmed a stronger yen at this point from a liquidity provider standpoint. At the same time that it breaks through the horizontal support level, we look at the leaders, the followers, and the totals, and we show that those also favor the yen. Now, you'll see that these are red. This is the New Zealand yen pair. Remember, on pair view, it's going to show the pair just as it would show up on your Forex trading platform, which is also favoring sell imbalances by all the market makers when you look at 100% of the market maker activity. We could look at these columns individually. We can look at all three of them. All we know now is we know that there's a strong yen. We know that the yen is strongest against New Zealand. We know it's breaking through a horizontal support level. And whenever something breaks through into a new through support or breaks through resistance, that can be a buy or a sell signal in the market. And now we know that if we were to take a sell here, that we would be trading alongside the liquidity providers. So what would our action be at this point? With the leaders, followers, and totals all confirming this sell signal, which all favors that strong yen that we've been looking at in the previous two videos. Well, in this case, as far as action goes, I don't think trade confirmation gets any stronger than this, as far as telling you, kind of giving you a screaming sell signal on New Zealand yen pair. When we look at this is an actual trade result from your instructor. When we look at all the results that have occurred on here, and let me bring up that pair view, that would give us a sell entry here at 86.275. That's where the entry was from it breaking through this support level. You could also look at this as kind of a consolidation pattern that occurred in the market. Our stop, if we wanted to put this in as just a very simple one-to-one, what we call one-to-one risk-reward trade, where we're going to risk as much on the trade as we want to make. We want to, for every pip we're risking, we want to make 1 pip back. We just place our stop 1 pip above the previous swing high. This would be risking, I believe it's 23.4 pips, I believe, and so we would put our limit at a one-to-one risk reward here at 86.041. And you see, by following the 3-step process, stronger yen, we know the yen's strong against New Zealand. We see that the New Zealand yen's broken into a new low, which also favors a strong yen. It's confirmed by pair view, showing us that this favors the sell imbalance. And very simply, we went from soup to nuts of finding a currency, finding a pair, and then finding a trade opportunity by going to our charts on, in this case, a 1-hour time frame, by just looking at a very simple breakout through support or resistance. In this case, a horizontal support break. So 23.4 pips in this case were a one-to-one risk reward. And this was just using a very simple base rule of 1-to-1 risk reward as far as this trading method goes. So the power of the three-step process. This really can do a lot of the legwork for you, to where going through this three-step process, you're trading along with the liquidity providers. You're trading along with the big money in the market. You go through step 1, which is just picking a currency, where we use Global View. We go through step 2, which is picking an individual pair by ranking all the pairs from strongest to weakest with Group View. And then in step 3, we pick our trade opportunity, which of course gives us the details of all the liquidity provider action. We've gone to the chart at this point. We've seen that there's been a break, or there's a trade setup that has occurred. And we use PairView to actively confirm our trade, manage our trade, and we can also use it for trade entry. Trade management and trade entry are steps that will be a little bit further down the road in our educational process. But I hope this has been helpful in explaining the three-step process to you, and in explaining the power of what PitView is doing for you through that three-step process. So coming up in our next video, I know you haven't gotten rid of me yet. I'm not going anywhere. So I'm just a click away on these videos. Just one click of the mouse and it'll bring up the next video. Common questions from here, because everything up until now has been rather vague, just going through, the basics of PitView, what each of these columns mean, what each of these tools mean, explaining what the three-step process is, which is a very simple three-step process. Questions that come up is, what time frames do I use, Steve? Well, that's a personal preference thing, but we'll go through how to set up individual time frames on PitView, and also setting up PitView on your desktop and customizing PitView to your own trading style. That'll be coming up in our next educational video, so that'll be just one click away. Once again, I hope you enjoyed the presentation. If you do have any questions, you can email me at steve.nurre@pitview.com. Other than that, I'll see you on your next click of the mouse. Thanks for coming in.